In this video, I will share 10 powerful candlestick patterns that are helpful in intraday trading, swing trading, and positional trading as well. I will also show you a secret candlestick pattern that most people don't know. It is called as the kicker pattern. Understanding this pattern can give you a real edge in the market. Now you might think there are many resources which talks about these candlestick patterns, right? Which includes Steve Nissan's book on candlestick pattern. But friends, two things matter a lot in trading. Number one, the power of the candlestick pattern. And number two, how frequently does it occur on the charts, right? So in this video, I will explain 10 candlestick patterns that are not only powerful but also occur frequently in all the time frames. In between, I will also explain how to read and interpret any candlestick patterns in all the time frames. So without wasting much time, let's start. Welcome to the world of candlestick patterns. The first powerful candlestick pattern is bullish Marubozu. So in bullish Marubozu is very simple. Both the open and close will be the high or low. For example, in this case, so this will be the close and this will be the high itself, which means there is no selling wick, right? Similarly here, there is no buying wick. Okay, this is the low and this is the open. Okay, so this indicates, in this case, for example, when the candle opened, there are no sellers. Buying power itself is very strong. And during the close of the candle also, there are no sellers, which means, buyers have dominated this particular time period, right? This particular candle. So that's why it's called as bullish Marubozu. Okay. So the important thing you should remember is the length of the body. Okay. So the length of the body should be significantly bigger compared to the remaining candlestick, remaining candle bodies. Okay. I will show you some of the example. Whereas, very small bodies, even though it looks like a bullish Marubozu, it will not be very powerful and you should not use it. Okay. So a long body only it indicates strong buying in case of bullish Marubozu or strong selling in case of bearish Marubozu in the market. Okay. Very short body on the other hand, it will not indicate or bring up more momentum, right? Now, there are three types of bullish Marubozu. Okay, so this is called as full Marubozu, in which there is not be any buying wick and there will not be any selling wick. Okay, so this is full Marubozu, a powerful bullish Marubozu. Okay. Now the next one is Marubozu open. So why it is called as Marubozu open means the open itself will be the low. Okay, there is no buying wick here. However, it will have a small selling wick. It is okay, it is acceptable, but definitely, I mean, it is compared to any other pattern, it is powerful, but this is highly powerful. And sometimes it is very rare to find this kind of, the proper full Marubozu. So this is acceptable. A small selling wick on the top of the candle is fine. So it is called as Marubozu open. Okay, this is fine. Now the another one is Marubozu close. So why it is called as Marubozu means the close itself will be the high. In other words, there will not be any selling wick here. So the buying, it's acceptable. Okay. Why? Because buying aligns with the type, right? So compared to this is a powerful Marubozu pattern because this wick is a buying wick. Buying wick indicates buying only, right? And there's a strong close, right? No, there is not a selling wick. Here, there is a selling wick, right? So if you take a comparison, these two are very powerful Marubozu patterns, but this is also a Marubozu. Okay, so these two are highly powerful. This is decent. Okay, so these are the three types of bullish Marubozu patterns. Now, this is an example. Okay, this is TCS 50-minute chart. See here, the market opened on some day. It displayed a bullish Marubozu, right? There is a very negligible, very small buying big. Okay, that is acceptable. We don't get any proper or ideal scenario. Okay, see here, the beauty of this particular pattern is it opened, almost exactly at previous day close. It displayed a big bullish Marubozu, right? That's what I was talking about. The size of the candle, that is also very, very important. If you get a bullish Marubozu with this size, it doesn't matter, right? Because every candle has a certain range of price action. If there is a small bullish Marubozu, the momentum or the impact of that bullish Marubozu will be very, very less. If you look at this particular candle, it's almost the equal to the length of the movement of 10-15 candles, right? So you should see a significant bullish Marubozu to take a trade. Okay, so now there is one more bullish Marubozu here, right? So this is also very, very significant, right? See here, the price consolidated here for a longest period. Price opened here with a open low. This is also kind of okay open Marubozu, right? Again, price exactly at the same level. It displayed a bullish Marubozu, right? You can see what happened after that. Here also you can see what happened after that, right? So this is one simple example of bullish Marubozu. Okay. Now, there is one more example. Here, this is Reliance Industries daily chart. The previous one was 50-minute chart. Now, this is a daily chart, different time frame. Okay, I will be showing the charts from different time frames so that you understand it in a better way, and you will also get a confidence to use these patterns in different parameters, in different time frames. Okay, now here see this particular price level acted as a resistance here, right? Strong resistance. See, whenever the price came here, price spent more time here. And if you see this, this is a bullish Marubozu, which means price broke the resistance level with a bullish Marubozu pattern, which means bullish, bullish, bullish. Okay. So now, whenever you see this, you can plan to take a long trade above the high of the bullish Marubozu, keeping a stop loss below the low of the bullish Marubozu. Okay. So this is one more simple example of a bullish Marubozu pattern. Now, how to find out this pattern in real market? Let's say you trade only in Nifty or you trade only in Bank Nifty. How do I, analyze or get this particular pattern in live market? You can use this indicator. Okay, if you go to trading view, click on indicators. If you type Marubozu, you will get two Marubozu white bullish. Okay, if you want to locate or identify bullish Marubozu means, click on this Marubozu white bullish pattern. It will identify it. Okay, in the past also it will mark with a small highlighter. If you're using it in a live market, whenever the bullish Marubozu pattern is formed, immediately it will be highlighted so that you will get it, you will grasp it immediately. Now, bearish Marubozu. So, bearish Marubozu is exactly opposite to the bullish Marubozu. Okay. Once again, there will not be any wicks. Okay. So, this indicates a strong momentum. Okay. Price opened here. There is no wick, which means there is no attempt from the buyers to push the price upside. So, price went down immediately and closed here. Once again, there is no attempt made from the buyers to push the price upside, which means buyers buying power is almost negligible or very less in this particular candle. Hence it is called as bearish Marubozu. Okay, now once again, similar to types of bullish Marubozu, there are three types of bearish Marubozu as well. Once again, this is a proper full Marubozu, a powerful Marubozu. Now, this is a Marubozu open because this is the open price itself is the high. Okay, so here it will have a small buying wick. Okay, now here this is Marubozu close, which means the close price itself with the low of the particular candle, it will have a small selling wick. Okay. Now, in among these three types, so this is a powerful Marubozu and this is also a powerful Marubozu. Okay, because selling wick aligns with the bearish Marubozu pattern, right? This is also bearish, going downside. So this is also downside, right? Selling wick. So these two aligns. So this one and this one both are very, very powerful bearish patterns. So this is also fine. It will have a small buying wick. It is fine, but these two are very, very powerful. Okay. So these are the three types of bearish Marubozu pattern. Once again, the length of the body is very, very important. Compared to the previous candle, this bearish Marubozu pattern should have a significant body. Okay, that is very, very important. You should consider only the candles which have a significant body compared to the remaining candles. You should not consider the smaller ones. I hope you got this point, right? This is very, very important, friends. Now, this is an example for a bearish Marubozu pattern. See, Nifty, this is an hourly chart. Okay, last time I took daily chart and 50-minute chart. Now it is hourly chart. There is a support trend line in this hourly chart. See here, it displayed a bearish Marubozu, which means there is a support line. Price broke the support line with a bearish Marubozu, which means there is a high possibility of price going on the downside. Okay, so the traders, they can plan to take the short trade below the low of this particular candle, keeping a stop loss above the high of the bearish Marubozu candle. Now, this is one more example. This is Infosys 50-minute chart. There is a strong resistance trend line. One day, I mean, here it struggled a lot to go in the upside direction. One day price opened. Look at the size of the candle. Okay, it is very, very big, right? So again, this is one simple example of a bearish Marubozu. It may not fell much on that particular day and the next day, but if you see this day and this day, it's very it fell very much, right? This indicates highest bearishness of the nature, right? Hey, sorry for the interruption, friends. I want to mention one important point here. You should not use candlestick patterns independently, okay? You need to use these candlestick patterns at important price levels like a support or a resistance. Let's say there is a strong support. Okay, there is a strong support and price came here and it displayed a bullish candlestick pattern. Then it makes sense to take a long trade above the high of the bullish candlestick pattern, keeping a stop loss below the low of the bullish pattern. Okay, similarly, if there is a strong resistance, if price goes here and if it takes resistance, which means if it displays a strong bearish candlestick pattern, then it makes sense to take a short trade below the low of the bearish candlestick pattern, keeping a stop loss above the high of the pattern. Okay, this is how you should use candlestick patterns with respect to the price levels. Now let's continue. Now the third one is bullish engulfing. Okay, so the bullish engulfing pattern consists of two patterns, two candles. Okay, the first one is small bearish candle and the next one is big bullish candle which engulfs the first candle, small bearish candle. Okay, so this is a small bearish candle. This candle engulfs this particular candle completely. Okay, so this is called as bullish engulfing. Okay, now how to identify this? Once again, it is very simple. You can go to TradingView in indicators, type bullish engulfing, you will get this. Okay, you can use this indicator to identify the bullish engulfing patterns in the past as well as in the live market. Now, this is one simple example, friends, of a bullish engulfing pattern. This is Reliance Industries. Observe, this is a weekly chart, not daily 50-minute. This is a weekly chart. If you observe this, so the first one is a small bearish candle, and the second one is the bullish candle, which engulfs the first candle completely, right? And you can see what happened after that. Okay, here it's again, if you can draw a support trend line like this bullish engulfing came exactly at the support line, right? And you can see after that, this is a simple example of bullish engulfing pattern. Now, one more bullish engulfing pattern. You can see this is CET Limited daily chart. There is a support trend line, and you can see there is a big bullish engulfing pattern which occurred exactly at the support trend line. And you can see what happened after that, right? Now, the fourth important parameter is the candlestick pattern is bearish engulfing. Okay, so this is mirror image of the bullish engulfing. The first candle is a small bullish candle, and the second candle is a big bearish candle which engulfs the entire body of the first candle. Okay, it's very simple, friends. The first one is a small bullish candle, and the second one is a big bearish candle which engulfs the complete body of the first candle. So this is an example of a bearish engulfing. And once again, you can identify as an indicator. If you go to trading view, if you type bearish engulfing, you will get an indicator. If you plot that indicator, it will show the highlighted lines. Anyway, I will show in the end. Okay, so it will show the highlighted engulfing patterns. So this is how you can identify the bearish engulfing patterns in the past as well as in the current live market. Okay, now this is one simple example of a bearish engulfing. The first one is a small bullish candle, and second one is a big bearish candle which engulfs the complete body of the first candle, right? This is Nifty 1 weekly chart. So here one more bearish engulfing, right? The first one is a small bullish candle. Second one is a big bearish candle which engulfs the complete body of the first candle. And interestingly, this came exactly at the resistance line, right? So this is one more example, State Bank of India daily chart. You can see here the first one is a small candle and the second one is a big bearish candle which engulfs the body of the complete candle, right? So this is a proper example of a bearish engulfing candle, and you can see what happened after that, right? Hey, sorry for the one more interruption, friends. Now I want to mention very quickly about price acceptance. So price acceptance means if the price starts showing more acceptance towards a price level, means there is a high possibility of price breaking that level, which means let's say there is a strong support, price came here, it started spending more number of time here, so which means there is a high possibility of price breaking below that zone. Okay, similarly, if there is a strong resistance, price came here, if it starts spending more time here, which means it is called as price acceptance, which indicates there is a high possibility of price breaking on the upside. Okay, now let's continue with the candlestick pattern. Now the next one is hammer pattern. Okay, so hammer pattern will have a small body and the wick should be more than 2 to 3 times of the body. Compared to this body, the wick should be more than 3 times. So what this indicates is price opened here, sellers push the price towards the downside. However, there are buyers, who are interested to buy at this level, and they bought more compared to the sellers, which means the buying pressure is very, very high compared to the selling pressure. And because of their buying, price came back to this level. In fact, it closed above that level. Okay, so this is the logic of the hammer pattern. Now, how do you identify? Once again, it's very simple. You can go to TradingView. If you type hammer, you will get this indicator. You can use this indicator to identify the hammer pattern. Anyway, in the end, I will type and I will show once again in the TradingView. Now, this is one simple example of a hammer pattern. You can see this is a Bank Nifty 50-minute chart. See, price struggled a lot at this level. Okay, so this is an previous day high. This is before that day high. Here also there is high at the same level. Now, one day price opened with a gap. It's a 15-minute chart. The first candle itself displayed a hammer, which means, see, whenever there is a resistance line, this zone belongs to the sellers, right? Which means whenever the price comes near to the resistance, sellers will pitch in automatically, and their selling pressure will, or it will push the price towards the downside, right? But here the price opened with a small gap, which means this is a wonderful opportunity for the sellers. But the sellers are completely absent, or the buying pressure is more, which absorb all the selling. Okay, because of the pressure of the buying, price went upside, closed above the open, right? So the first candle itself displayed, and it is saying I will go upside today. Okay, that's what happened after that day, right? As I said earlier, traders can plan a long trade above the high of this candle, keeping a stop loss below the low of this candle, right? Now, this is one more example for an hammer pattern. This is hammer. This is also hammer, right? So you can see what happened after that. See, sometimes what happens is, in this case, you can see a red body, right? You might think hammer should have a green color body, which means a bullish body and a big wick. So that is proper hammer. There is no doubt about it. But you can consider this also as an hammer, right? Why? Because see, the price opened here. Sellers push the price till here, right? But there are some buyers who are strong enough to absorb the selling pressure, and they push the price till here, right? So in this particular body, only this much belongs to the selling and this much belongs to the buying part, right? So that's why the sellers are very, very strong. Okay. Now, so even this is a hammer. Okay. Now, bearish pin bar. So many people identify with the different pattern names. It's also called as inverted hammer, etc., etc. So you can simple way you can remember the bearish pin bar. I will also identify or also explain how to read a candle or some of the candle or group of a candle without remembering the name in the end. Okay, that will be very, very useful. So this is a bearish pin bar. So in bearish pin bar, the candle body will be very, very small, and it will have a big wick on the upside. So what this indicates is price opened at this level. Okay, buying pressure, it pushed the price till this level, but there are very strong sellers sitting at this level, and their selling pressure pushed the price, or it negated all the buying pressure, and it pushed the price downside, and it closed below the open level, which means, so in the entire body of the candle, in the entire width of the candle, sellers are very, very strong, which means there is a high possibility of price going in the downside. Okay, especially if it occurs at a resistance price level. That's very, very important. You can see this is an example. See here, this is a resistance zone. Nifty, bank nifty 50-minute chart. It displayed a bearish pen bar at the top at resistance, and you can see what happened after that, right? And this is one more example, HDFC Bank 50-minute chart. Here, the market displayed a big bearish, it's kind of Marubozu, right? Marubozu pattern. Exactly at the previous day high level, it displayed a bearish pin bar. Once again, because of the green body is acceptable, because in the entire body, here to here belongs to the buyers, right? It is a buying zone, but here to here, so this is completely selling, right? Don't go with the color, friends, because the color can cheat you, or by looking at the color of the candle, you can misinterpret whether it is a buying or selling. So this is not a buying candle, friend. This is a selling candle. Okay. So this is a bearish pin bar, and you can see what happened after that, right? Hey, sorry for the one more interruption, friends. Now we talk about price rejection. It is opposite to the price acceptance. Okay. Suppose let's say there is a strong support, price came here, instead of spending more time here, it displayed a strong bounce immediately. So this is called as price rejection. So there is a high possibility of price reversing from this level. Similarly, if there is a strong resistance, if the price comes here, instead of spending more time here, let's say, it came down immediately with a strong selling, so it means there is a high possibility of price rejecting at this level and it's going on the downside. Okay, so this is all about price rejection. Now let's continue with the candlestick pattern. Now, one more, the important candlestick pattern is doji. Okay, so doji is a simple candlestick pattern which indicates indecision. So in most of the cases, the price will be very, very close to the close itself. Okay, there will be big upper wick, there is a big lower wick. The color of the candle doesn't matter because the open and close are very close to each other. It doesn't matter. What it indicates is it has a big buying wick, it has a equal selling wick. So this indicates indecision, doji. Okay, now there are three types of doji, friends. So this is called as gravestone doji, this is called as normal doji, and this is called as dragonfly doji. Okay, now this indicates bearishness. Why? Because the price opened here, buyers push the price upside, but there are strong seller at this level, and because of their selling, price came and reached here, right? So only this much belongs to the buying power, but whereas this is the complete selling, right? So this is, bearish in nature. Even though it is a doji, it is called as gravestone doji. It is bearish in nature. Okay, now this is a perfect normal doji. So price opened here, it went up, it went down, it closed here. So which means both buyers and sellers are, fighting with each other in an equal force. Okay, so what happens after that, that's a different story. We need to wait until the formation of the next candle to make any trading decision. But at this point of time, buyers and selling power are equal, right? Now the third one is dragonfly doji. So in this case, this is a bullish doji. Okay, see here, price opened here, sellers push the price till here. However, the buyers are very, very strong and they push the price till the open level, right? Which means, this complete price level indicates buying, whereas only this much indicates selling, right? So these are the three different types of doji. This is gravestone doji, bearish in nature. This is a normal doji, indicates indecision. This is a dragonfly doji, it indicates bullish behavior. Now, this is one simple example. Okay, so this is bearish doji, right? You don't have to remember the name also if you remember the logic. Okay, so this is a bearish doji, right? Because price opened here, price went upside but closed here, right? It is selling week. So this is a bearish doji. This one is a normal doji, right? See here, price opened here, went upside, went downside, but closed at the exact level, right? So this is a normal doji. And here, this is a bullish doji, right? Even though it appear in red color, see here, price opened here, it went downside, but it came here, closed at the exact level, right? So this entire thing, indicates buying power, whereas this small thing indicates selling power, right? So this particular chart has all the dojis. Okay, so don't treat all the dojis in a equal way, friends. Okay, so the proper doji only indicates a bullish, I mean the neutral behavior in indecision, whereas see, this is a bearish doji, whereas this is a bullish doji. Okay, don't go with the color. So this is an important learning to read a price action. Okay, now rising three method, this pattern emerges or it will come during a strong uptrend, and it offers valuable insights or it indicates the potential continuation of the uptrend. Okay, so this is it comprises of basically 5 candles. So the first one is a big green candle followed by the small red candle, and the next one is also a big green candle. Okay, so this is usually, this particular pattern comes in an uptrend. Now, once again, you can identify this pattern using an indicator in TradingView. You can go to TradingView. If you type rising three methods, you will get this indicator. If you select it, it will identify in the past it as well as in the live market if there is a pattern. Okay, if it comes, it will highlight that particular pattern. Now this is a simple example. See, the first is a see the market is in a uptrend, right? Infosys daily chart, the price is an uptrend. So this is a small pullback, okay? But originally it is in uptrend. So the first candle is a big bullish candle, right? And you can see the next three candles are small bearish candle, and the fourth one is a once again the this is a bullish candle, right? So this properly indicates rising three candle, right? See, you can see what happened after that, right? Price went upside, right? Now this is one more example. See, if you use an indicator, this is how it highlights. It highlights the particular area, okay? See, in this case, this is a green candle and three small red candles, and the fourth one is a green candle, right? Now you might ask, price went down after that, right? See, friend, that is why I always say anything can happen in the market, and you should not risk more than 2% of your capital per trade. Let's say if you have 1 lakh rupees in your trading account, if you lose the trade, which means if there is a failure in your trade, you should not lose more than 2%. That is why risk management, money management is very, very important. Now, all these things are trading concept. Okay, this is a patterns. Which occurs on a high probability if you use it properly, but there is also a possibility of failure, right? So let's say there is a pattern occurred. If there is a war situation, if there is an earthquake situation in some country, automatically the price will fall, right? That's why we should follow the proper money management, okay? But even after falling, it continued its uptrend, it's fine. But still we should plan an exit, okay? We should plan an exit. We should always keep a stop loss below the low of the any bullish candlestick pattern in case of a long trade, above the high of a bearish candlestick pattern in case of a short trade. This should be must, okay? Now, falling three method. So falling three method is exactly opposite of the rising three method. So in this case, the first will have a big bearish candle, and there will be small three green candles. And once again, there is a big bearish candle. Okay. So entire these five candle represents the falling three method. Okay. Now, once again, you can identify using an indicator. It's called as falling tree method here, bearish. Okay, if you plot this indicator, it will highlight any particular candles which appear or which looks like this. Okay, see, it highlights like this. See, this is Nifty. I think this is a 3-minute chart. Again, lower time frame. You can see the first one is a bearish candle, small three green candles, and the fourth one is also a bearish candle, right? This is a proper falling three candle. So you can keep, I mean, the traders can plan a short trade below the low of this candle, and keeping a stop loss above the high of this candle is a must, okay? And you can see what happened after that. This is a falling three example. Now, kicker pattern. This is one of the most powerful. I would say this is the most powerful pattern, friends. See, it appears like this. This is called as bullish kicker, bearish kicker. But I will tell you in advance, this is a highly powerful pattern, but it occurs very rarely in all the time frame, friends. See, if it occurs, there is a high possibility of price moving in that direction, but the occurrence itself is very less, only for this particular pattern. The remaining in patterns, they occur very frequently, okay? But this particular pattern is very rare. It looks like this. This is bullish kick bar, this is bearish kicker. See, the price, it is in a downtrend, okay? The price is in a downtrend. Price opened here, price closed here, okay? So this is the close, okay? Next day, price will not open here. Price open near or above the high of the previous bearish candle, and it closes above very high. So this indicates all the bearish, all the sellers are trapped at this level. The sellers in this particular candle, they are completely trapped, and they don't have power, which means there is an strong change in the momentum. So you take any stock, look for any important reversal, either upside or downside, you will see this pattern, okay? So it occurs very rarely, but whenever it occurs, this is very powerful, friends, okay? And similarly, this is bearish kicker. See, the the price opened here, okay, the price opened here, uh, it came here, okay. So now the price opened here and it came here, okay. So this is how the bearish kicker works, okay. So now you can see one simple example. See here, this is a nifty daily chart. See here, this is an important reversal run, right? Price reversed important, okay? See here, the price, you know, it closed here, right? It closed here. See here, it closed, it price opened here and it closed here, right? So this is a proper, it's very powerful, kicker pattern, bullish kicker pattern. You can see one more example here. This is a Reliance daily chart. You can see here, right? The price, closed here. Next day the price opened with a gap, and there is a big bullish candle, right? See, this is also marked the reversal, right? See here. So this is how, I mean, both the kicker, the bullish kicker and the bearish kicker are very, very powerful pattern, but it is very, very, difficult to locate or identify. So if you identify, this bullish kicker or bearish kicker in any stocks, you can mention the stock name in the comment section. I will confirm whether it is correct or not. Now we will continue with the how to read the chart, okay. So that's also very, very important. So we will go to charts. See here, many people struggle a lot to read a candle, okay. See here, many people, what they do is they go with the color. Okay, if the color is red, sometimes it happens unconsciously. They think if the color is red, it is bearish. If the color is green, it is bullish. It may not be the case, friends. It may not be the case all the time. Okay, see, for example, this particular candle. So, do you think it is a bearish candle? Need not be, okay. See, if you check this, okay, if you, I will remove this. If you check this zone belong to the buyers, right? Okay, so this zone belongs to the buying, whereas this zone, only this zone belongs to the selling, okay. So you can observe who is powerful. The buying is powerful, right? This is still, acceptable. But if you look at some other candle, for example, what I do is I will go further this way. For example, I will pick a proper candle so that you will get a better clarity. Okay, this particular candle, I will zoom in so that you will understand in a better way. So by looking at the color, so many people say this is a bullish candle, okay. So friends, please remember, this is not a bullish candle, okay. See, here to here, this zone belongs to the selling pressure, right? Only here to here, only this small thing belongs to buying. So in the entire body of the candle, in the entire price level, the maximum area belongs to the selling sellers, right? The only this chota small belongs to the buyers. So don't go with the color, okay. Just because the candle is green color, don't think it is buying candle, okay. So this is how you should use it. And I will go some other chart, okay. I will go to some other thing. For example, I will go to Titan. If I go to Titan, see here once again, by looking at the color of the candle, so don't think it is bullish, okay, because from here to here, so this zone belongs to sellers, right? And from here to here, only this zone belongs to buyers. So tell me, who is more powerful in this? So this is without a doubt, this is powerful, right? Compared to this, it's not even visible. So in this particular candle, okay, I'm not talking about this, or I'm not talking about the next what happened. In this particular candle, sellers are strong compared to the buyers, okay. So as I said earlier, friends, you should not use the candlestick pattern independently, okay. You should use this candlestick pattern at an important support zone or resistance zone, something like that. Let's say, for example, if there is a strong resistance zone here, and okay, price comes here, and if it displays a resistance, for example, let's say bearish pin bar, it displays a big bearish pin bar, then you can plan to take a short trade. If it displays a small bearish pin bar in between somewhere, if it is not support, if it is not resistance, then you should not worry about it. Okay, you should not use this candlestick pattern independently. You should use these candlestick patterns with respect to important price levels, friends. I hope this video is really helpful, friends. If you have any doubts or questions, or if you want to know any other topic, friends, because I will not get your doubts, right? So if you have any doubts, or if you have any more clarity on any topics, you can please comment in the comment section. So I will think about it. Okay, if I think that topic is very useful for traders, then I will plan to make a detailed video like this on that particular topic. Okay, so I hope this video is useful, friends. If yes, please like the content, subscribe to my channel and share with your friends. So we will see you in the next video with another useful content. Until then, thank you, see you, bye bye.